Hi, welcome to Atinasia. I'm Laurent Timmermans. It's been almost a year, actually more than a year, that I published a video on this YouTube channel, so it's about time, eh? But there is something really big coming, and I would like to talk about it in this video. I would like to talk about the Common Reporting Standard and also its consequences on Hong Kong company, Hong Kong offshore tax exemption, for your company, as well as digital nomads. So you might not see the relationship at this moment, but bear with me, because I have a lot of digital nomad clients that they don't realize what's coming to them. So I really would like to warn them in this video. Now, the first thing is, what is the Common Reporting Standard? It's also called CRS. It's an initiative from OECD, and 100 countries signed this agreement. And this will start in 2017 for the first batch of countries, and 2018 for the second batch. Now, let's face it, the first batch is quite boring because it's European companies, etc. European countries with a fairly high tax rate and things like that. But the second batch, it's becoming much more interesting, because this is where you see a lot of tax haven, low tax countries, etc., that will actually start to release financial information about their non-residents. So here's what is the Common Reporting Standard about. It's an automatic exchange of information between countries, and it's at the initiative, not the initiative, but it's the duty of the bank to actually do this reporting. So it's not the government that will just report because they don't have the information, but it's the bank that have to provide this information to the government. And this is a big difference, and you will understand why in a minute. So what will happen, imagine you are a resident of France and you have a bank account in Hong Kong, and your name is Martin. Okay, so you're Martin and you have a bank account here in Hong Kong for your company, and you live in France. And you never declared anything to France about this Hong Kong company because you didn't think it was interesting or useful to do so, at best. Now, here's what's happening. From 2018, your bank will actually declare to your country, to France, that you have an account there. They will report you to your country, and they will say, let's say Martin has an account at HSBC with 250,000 Hong Kong dollars on it. Okay, so that's an example. Now, it's not illegal to have a bank account in Hong Kong. It's not illegal to have a company in Hong Kong. What is illegal, though, is to not declare any of those in your country of residence, and that's where many people will have many problems. Okay, so because plenty of people have been opening companies in Hong Kong for years and they never declared anything to their home country. Okay, now some people already told me, it's like, no, I got it all covered. I have nominee shareholder, nominee director. I'm invisible. Well, yeah, you're invisible in the register, but at the bank, they still know who you are. You're the ultimate beneficiary of your bank account, and basically your bank will not report your nominees. They will report the ultimate beneficiary, meaning you. So many people believe that they are safe and that everything is alright, but actually they are not, because the bank will report them and they don't even expect it. So this is really dangerous. Because what is the Common Reporting Standard, in a way, is the end of bank secrecy. And then you could argue with me that there's still some ways to hide some money, but imagine 100 countries sign this agreement, and within those 100 countries we have most of the developed countries, but we also have many of the, if not all, the tax haven. So there's plenty of tax haven that sign these agreements. The most common one, like BVI, Seychelles, Mauritius, Cayman, Vanuatu, I mean, they all signed these agreements. Panama signed the agreement as well. Low tax countries signed as well. So Luxembourg, Switzerland, Ireland, Hong Kong, Singapore, they all signed. Okay, so you have to be really careful. This will become really the end of bank secrecy, in a way. Now, there is still some way to do it. Like, for example, Taiwan didn't sign the CRS, and it's not likely to do it in the coming 2-3 years, I guess. US didn't sign the CRS, so actually there's still a way to hide money in Wyoming or things like that. No, I'm not giving you advice to hide money, because I never did it. I'm not doing it with my clients. I don't like the whole idea of hiding money, not paying tax anywhere, being, not clear. I don't like it, but I know some people have been doing it, and many of my competitors have been pushing it. So that's why I give some warning here. So if you have nominees, you are not covered, okay? Just to wrap that one up. Now, this will really change the whole strategies, your whole tax planning strategy and the corporate structure that you may use. So in the past in Hong Kong, like for the last 2-3 decades, people have been opening company here in Hong Kong, claiming offshore tax exemption, although it's becoming more and more difficult to do so, and and not declaring anything anywhere. That was kind of a strategy. It's like and people were actually advertising Hong Kong 0% country. It's not true, by the way. Corporate tax in Hong Kong is 16.5%, and there is a mechanism called offshore tax exemption, which enable you to ask for an exemption to the Hong Kong government. I have done a video about that like 2 years ago or something like that. You can already see back then that I didn't like it, but now it's really dangerous. And why it's dangerous? Because in order to get this exemption, you are basically proving the Hong Kong government that you have no profit generated here, no operation, nothing, no office, no director, no contract signed, no operation in Hong Kong whatsoever. So basically what you are doing, you are proving the Hong Kong government that you have no substance in Hong Kong. And by proving to the Hong Kong government, you're also proving to the rest of the world that you have no substance here and that your Hong Kong company is an empty shelf. And now in your tax planning, you have to be really careful, because what will happen is that your country of residence will be aware that you have a company in Hong Kong. Okay? And when they get back to you and say, okay, you have a company there, what is it? How come, you never declare anything? Where are you paying your tax? Well, I don't pay my tax anywhere. Well, you kind of leave the door open there to get troubles, okay? What will become really important now in the future is to choose a good place for you to get your tax residence, and also build substance for your company. So substance means get an office, get people working in here, get director and so on. So to me, from the beginning in Latin Asia, I always encourage people to choose Hong Kong as their base and pay their tax here from the early beginning. But now it will become more and more the trends. I think people will onshore in Hong Kong instead of offshoring. They will really choose it at their base for their Hong Kong for the company. Why? Because, well, there is no VAT. We have 16.5% corporate tax. It's really simple. Basically, there is no dividend tax and other advantages that I won't enumerate all of them here. And if you even choose to actually be resident in Hong Kong, like what I'm doing now, I live here basically, personal tax rate is like capped at 15%. And to be honest with you, they also have a lot of mechanism. I mean, it's not that you pay 15% on everything, on all your income. It's like the first 132,000 Hong Kong dollars you don't pay any tax. The next 45, 2%. The next 45, 7. The next 45, I'm talking 45k. Next 45k, 12%. The rest 17% until you meet the 15%. So it's actually quite sweet. If you make a bit the math, I will make it for you so that it's more simple. Is that on your first 267,000 Hong Kong dollars a year, you will pay 3.5% tax, which is about 9,400 Hong Kong dollars. And I mean, that's kind of sweet, really, because don't forget that these salary, etc., will be accounted as your expenses in your business. So that's a good strategy. So I think we'll see more and more of these in the future in Hong Kong, and less offshoring. People that will do offshore will have really good lawyer in the back to actually back them up. So you won't do it the cowboy way and coming here, opening the company, claiming offshore. First, as I said, it's not easy to get the offshore tax exemption. But on top of that, even if you get it, it's kind of a poisonous gift. It can just backfire in the future if you don't know what you are doing, if you don't choose to channel the money in another country where you can legally reduce your tax burden. Yeah, so you have to be really careful about these exemption. And yeah, this brings us to the last point, the digital nomad. So you may be wondering, how come I started suddenly to speak about digital nomads when I was talking about common reporting standard, and then offshore tax exemption. The reason why is because I do have a lot of digital nomads. Over the last few years, we really grew the amount of digital nomads clients we have here, and we have heard a lot of wrong information that will actually bring issue in the coming future. So many of the digital nomads clients we have believe that if they don't stay for 182 days in one place, they are not tax liable anywhere. They are basically non-resident in the world. They have no residence. Well, first, it doesn't really work that way. Many countries don't even enable you to be resident nowhere. So if you want to give up your residency somewhere, you have to have the residency somewhere else. No, and I'm really talking about residency here, not citizenship. So, for example, if you are German and you live in Germany, and suddenly you leave Germany and go live in Thailand and Philippines and Vietnam, etc., and then yeah, basically you don't live in Germany anymore. You might think, oh, okay, so I'm a nomad, I'm not tax liable. No, I'm not an expert in Germany, but it's possible that your country will just consider you as a tourist, which would be the case, for example, for Canada. There's a lot of cases in Canada of people that left for a long time, you know, sometimes 10 years. They believe they were resident nowhere, then they come back, and then the taxman asks, okay, so where are your tax that you didn't pay for 10 years? No, because Canada was considering their these people as tourists. They were just Canadian residents, but tourists traveling around the world. So you have to be really careful with the residency things. First thing you could do if you're a digital nomad is just tell your town hall, you know, that okay, you're not resident anymore, you are moving, you know. In many countries, they will ask you to actually prove that you are moving somewhere, and also that you become resident somewhere else. Okay, so a good idea is to find a place for your residence that makes sense, you know, where you can be officially tax resident, so that you can prove that, yeah, I was not tax resident there anymore, I was tax resident there. Okay, there's a couple of good places where you can get relatively low tax rates, you know, and that don't even require you to stay there. Now, be careful if you choose places like Panama. I mean, come on, don't take people for stupid. They know what's going on there. But if you choose like some places like, I don't know, like Bulgaria, where people are not really aware that it's actually becoming the next tax heaven, you can have some pretty sweet residency there and then still travel around. Or even Hong Kong. In Hong Kong, you can actually get your residency and you don't have to stay. Now, getting the residency in Hong Kong is relatively expensive, so you better run a sizable business, because it's not everybody that can afford to become a Hong Kong resident. But that makes also the residency more legitimate, because if you can afford to be a Hong Kong resident, that means you really have some ties with Hong Kong, you know. In our case, you need to get business premises, staff, and show that you have money in the bank. Yeah. So just to come back to the whole idea, if you don't stay 182 days in a place, that doesn't mean you're not resident anywhere, okay? And there's other criteria for the government to assign you a residence. So the 182 days is not the main rule, you know. There's other things such as your vital or economical center of interest. So where do you have your interest? Imagine that you are from Belgium and then you go live in Thailand, but your 3 kids are actually staying in Belgium and studying there, you know. Your wife stays there, you have a house there, a big house, and your wife is staying there. You have another side house that you rent to students, and basically you have no assets anywhere else in the world. And also, don't take the Belgian government for stupid, you know. They will be like, okay, well, you know what, if you have residency nowhere, I think your residency is in Belgium, because you have everything there. Okay. Yeah. Now, what I'm saying is there is no clear cut. All these cases has to be discussed. It's international tax law is quite complicated and complex, and it's not really clear. That's why many people play with gray area. Generally, when you have a lot of money and good lawyer, you can exploit all these loopholes. But when you play around in the cowboy way, you actually put yourself at risk. So you have to be really careful there. Okay, so the advice there, I would say, for the digital nomads, just to wrap up, because I've been talking a lot and not really in a structured manner, I know, so I'm really apologizing for that. But for digital nomads, basically, what I would advise you to do is choose a place to put your business that makes sense, such as Hong Kong, for example. Pay a tax here, onshore, demonstrate that this is your basis, this is where your business is resident, and this is where your business pay its taxes, and this is where your business operates. Okay, so this is the first thing. The second thing is that find a residence for yourself. As a digital nomad, you are basically like a deserted island in the middle of the ocean that just wait for somebody to claim it. What I would do if I find an island that doesn't belong to anybody in the world, I will quickly choose who I want to pledge allegiance to, because I know it's not a good idea to say, hey, there's an island here with nobody on it, you know, please come and take it. So this is actually what I would advise you, is go choose your own residency, you know, choose who you want to pay tax to, your tax residency, and do all the formality to do it well, and make sure you are not liable of any tax anymore in your own country, otherwise you will be in trouble. And why is it related to CRS in a way? Is because, think about it now, if you have a Hong Kong company and you live in Thailand, and you declare nothing in your home country that maybe still consider you as a resident, you are not even aware of it, and then suddenly your bank is basically declaring to your home country that you have a bank account there with I don't know how much, hundreds of thousands of euros on it. Well, that will not be nice, really. You may end up with quite a bit of trouble. So I'm telling you, like, really be careful with that. If you want, we can talk a bit more in details about it. There's a good place to get a residency. There is for the company, I mean, Hong Kong is an obvious choice. I have been looking around for a long time for other options, but it seems to me that Hong Kong remain really the best option. And each time I talk to international tax lawyer or like big entrepreneurs, they all tell me the same thing, is that Hong Kong seems to be the best place. There are other places for sure where you can get lower tax and still proper operations. I'm getting really interested at this moment by Bulgaria, by the way, because 10% tax rate on profit is quite good, and personal as well, 10%. Like, don't forget, there's also VAT, there is dividend tax, etc. in Bulgaria, but they still have like really interesting rates, and it's in Europe. So I'm also looking at that. But Hong Kong definitely remains an amazing place to do business, close to China. With the emergent business models nowadays as well of e-commerce. I mean, emergent, I'm not even sure if we can say it's emergent, because really there's so many of them. But e-commerce is becoming really big. It's replacing retails those days. We got a lot of clients that run Shopify shop, Amazon, etc. And Hong Kong makes plenty of sense for them because they're close to China for the sourcing. It's totally easy to justify that Hong Kong has to be the place to do the business, because then you can deal with China manufacturer and their Hong Kong companies, because many of them have Hong Kong company. And then you have all the infrastructure really in Hong Kong to actually deal with Amazon shops. I mean, we have the port, we have a banking system that works. Also, for those that have Shopify, we have a lot of payment gateway like Stripes, Braintree, 2Checkout, etc. So actually, it really kind of makes sense for e-commerce to come here, and we got plenty of them coming our way over the last few months, and or year, I could even say now. And yeah, I think if you run an e-commerce, I think Hong Kong is really the place to be. But if it's business services or things like that, there might be other places, maybe even in Europe or something that makes sense as well. But anyway, sorry for this kind of disorganized talk, but I think it was good to give an update. And trying to organize my talk too much, you know, I just get lazy and don't want to do any videos. So I thought, let's try to publish something maybe less prepared, but at least it's out there, because long time I want to go back to do videos, but things has been really crazy here. We changed office, we hired people, we moved part of the staff to other locations, and we are growing quite okay, which I'm quite happy with. but yeah, it's quite difficult then to go back and do some videos from time to time. But I will try to keep up and come back with the video from time to time to give some updates on what's going on in Hong Kong and what you should be careful about. So thanks for listening until now, and if you have any question, feel free to contact me at laurent@atenaja.com, and yes, take care of CRS. Thank you.